Weekend's right around the corner, and today's looking to be rather interesting. So let's get into our topic today. Is what is the Dixie? What is Dixie? What does it mean? What is it? People say it's the dollar, but it's actually not the dollar. It's something a little more in depth. We're gonna take a look at it today. What it is, and what it means. That's the important part. What it means for not just crypto, but all markets. Let's hop into it, and hope you guys enjoy it. So what is the Dixie? The Dixie is actually not the dollar. It is a basket. It is the dollar versus a basket, and that basket is 6 major currencies. The first one is the euro, which is the largest portion. Euro is 57.6% of the basket that the dollar is weighed against to create the Dixie. The second currency is the JPY, and it is 13.6%. So we can already see that the euro is the biggest player when looking at the Dixie. You can see 57.6%, so already it is a larger or heavier weight than the other 5 currencies that we're going to talk about here combined. So when we see the euro move, logically we should expect to see the Dixie move. The British pound. Ooh. 11.9%, similar to the JPY. Fourth is the Canadian dollar, the CAD at 9.1%. The SEK, I believe it's the Swiss crown. The SEK at 4.2% and the CHF at 3.6%. So we can see 2 currencies here that don't compromise a huge percent, but think of it this way, is there's many more than 6 currencies out there, and none of the other ones are included. So even though it's only 4.2 or 3.6%, they're counted much more heavily in comparison to every other currency that's not involved whatsoever. So when we look at the Dixie, what we're really looking at is the strength of the dollar versus these 6 other currencies. So what I said before is not technically true. It's not completely void of the dollar, but it's the relationship between the dollar and this basket and their weightings. Yeah, that was the written here. Maybe I didn't. The Swiss franc is the CHF. My bad. That's the Swedish krona, SEK. So we have the yen, the pound, the krona, the Canadian dollar, and the Swiss franc. So when we combine these together, we weight them against the dollar, and we use that on a base of 100. And this was established in 1973, shortly after the Bretton Woods Agreement was dissolved. And before, at the time, 1 ounce of gold was only $35. So you can see that the dollar started at 100 in 1973, the Dixie at 100. That's the base value. And gold has changed quite a bit since then. So while this is a measure of the dollar's strength, it's not a measure of the dollar's strength with respect to anything other than how much these other currencies have changed value. And so basically what we can see here is that 100 in 1973 is very different from a 100 today. You know, the dollar is somewhere at $1,800, $1,900, and was only $35 for 1 ounce of gold. So while it does reflect strength, it doesn't reflect strength maybe in the way people would assume. You know, it's not really showing inflation. And what happened after this is that currencies really allowed their value to slip and inflation to take over. And so we see a divergence between the dollar's value and other goods and services. Basically, there's the base of 100. So if the Dixie is 110, that's easy math. It's just 10%. It's gained 10% value versus the basket. And if it's 90, it's lost 10% versus the basket of the original base 100. So it keeps that structure. It obviously has a floor of 0, but there, in theory, is no top to where this could go. It could be 200, 300, 400. That's never happened, but it is, in theory, possible. So what does this mean? All trading is done in pairs. So trading is exchanging one asset for another. And in every trade, there is what is called a base. And for this example, I'll use the Bitcoin, and then an alternative. And what it is when you see Bitcoin dollar or Bitcoin euro or Bitcoin altcoin, what it is a ratio between the two assets. And so we can look at this and say, well, what does this mean? What does the dollar changing in value really matter? And well, it means a lot because many things are traded in the dollar across the world. And so we can come up with some scenarios here. Assuming in this, just for the explanation here, let's say that the base stays the same, and that's Bitcoin, which is the least likely to stay the same. But let's make up a scenario where Bitcoin is $10,000 just to make it simple, and it doesn't fluctuate at all. And so what we can have is we can have our alternate, or the not base, the other asset we're trading, that could go up in value, and the base stay the same. If that's true, then we would expect the base is actually losing value, even though it's invisible, because it's still staying at, let's put our 10,000 in here. Because what it's being exchanged for is actually gaining value. When we have our base and the alternate asset is going sideways, that's pretty much a true stalemate. Nothing is changing in value. And then we can see when the alternate goes down, the base is actually gaining value, but you can't really see it. And so what's important for us here is that the dollar being the alternate here, not the base, though we could consider the dollar the base and then Bitcoin the alternate, doesn't really matter. We see fluctuations in value. And so when the dollar is stronger, typically that means it's able to purchase more of its alternate pair. So in reality, we would see Bitcoin's value technically go down where we would expect to, but Bitcoin's a little complicated because Bitcoin itself, while not pegged like the Dixie is pegged to this basket, Bitcoin is a basket of assets. It's traded in many different currencies, and then also within itself, within its own space, it's traded with altcoins. And so what we're looking at here, I think maybe even Bitcoin's a bad example. I think maybe Apples is a better example because apples aren't really a basket of anything. They're just a commodity that has a pretty static cost and value. So if we saw the dollar go up, so let's say one apple, we see the dollar go up and it can buy one apple and then it goes up. So it can buy one apple and the dollar goes up. Now all of a sudden maybe the dollar can buy two apples. If $1 or one apple is $1 and the dollar doesn't change, maybe we still have that single apple it can buy. If the dollar value goes down, maybe now it can only buy 0.5 apples. And so what we would see is we would see the cost of an apple change based on what we're trading it with. And so while we can buy two apples, what that really would mean is an apple costs 50 cents now. There'd be no change if neither changed. And what we see is actually, if the dollar goes down, maybe it costs $2 for an apple. So we can see that the dollar changing value should impact everything that it's being traded with, not just Bitcoin, but any goods or services or commodities or assets. And so it is a little tricky here because Bitcoin is traded in so many things. I don't think it's as cut and dry as the Apple situation. We may see, and that's kind of why I had this 10,000 here, is we can technically see any of these scenarios happen and Bitcoin's value not change at all. Because while it makes sense with apples, it doesn't make quite the same amount of sense with dollars because the Bitcoin is exchangeable in so many different ways and in many senses is comprised of dollars itself. And so it's a very complex relationship, which doesn't seem to follow exactly the same correlation as we would expect as with the apples scenario. And so today we're seeing the dollar, or the DXY, we're seeing it rise. I think it was up 0.5% just today, since today started really in the last 8 hours. And what we would expect in our Apple scenario is that the cost of an apple would go down. We haven't really seen that with Bitcoin. Where did my Bitcoin chart go? It disappeared on me. Any of them. We haven't really seen that. We saw the dollar go up, and we really have kind of seen also Bitcoin go up in the last 8 hours. Let me put this on the same time frame. Not directly, but we can see that the dollar has been rising since the 21st. It's gained about 2%. And Bitcoin... got a little mixed up here. We're seeing the dollar, at least locally, move up and Bitcoin moving sideways, and that's not what we would expect. Mostly, if you look at other markets today, like indices and stocks, typically you will see them being sold off because the dollar is now able to purchase more of them. Each dollar is able to buy more shares than it previously was able to. Which would, by definition, basically make them cost less dollars and thus pull the price down. Bitcoin not really doing quite the same thing. In other episodes, we've gone back into the history and tried to look at that relationship. And while most of the time, or at least probably at least 50% of the time, the dollar and Bitcoin seem to move against each other, similar to everything else. But there are times in the past, and actually very important times in Bitcoin's history, where that wasn't the case. And why it wasn't the case, I can only speculate. I would imagine because, well, maybe a lot of the value in Bitcoin is dollars. Most of the Bitcoin that is exchanged or traded is traded in dollars, and thus maybe holds some of that value and scales with it. Let me put this on a weekly here. Maybe we can get a good look at this. Tried this a different way last time and it was way too visually confusing. So the dollar, let's see, the last time the dollar really rallied super hard was July 14th to March 15th, and we really can extend that out all the way to January 2017. If we look at Bitcoin in that time frame, well, this is Coinbase, so we don't really have that. But if we look at Bitcoin, we can see that Bitcoin did some rallying too. Certainly a higher percent, even though it doesn't really look that way here versus the DXY. But there's times where Bitcoin kind of consistently is expanding with the dollar, and so I don't believe there is that same relationship. I think it exists, but it is a little different. It's a little different than what we'd expect. Definitely open two ideas as to why that is. You know, I don't think there's a wrong or right answer. But it is an interesting relationship. And so many people have been asking about the Dixie and what it is, and so I figured we would do just a little intro, little easy lesson here about it. And so I hope that helps some people understand exactly what it is they're looking at and what it is in the news when they hear dollar is up, dollar's down, what that means for markets in general, and more importantly, what that means for Bitcoin. So yeah, that's my little dollar 101 take. We're going to be keeping an eye on this today. You know, that we've seen definitely some gains on Dixie here recently. But if you zoom out, it's really not that impressive. Like, we have a very nice weekly candle here. Dollar's up 1.8%. That's a lot of volatility for a major currency. But where is it? And we look at this